Facebook is one of the biggest companies out there. Just recently, it hit $1 trillion market cap, and it's actually just slightly over that now. And there's only five, well, including Facebook, there's 5 companies that are at that market cap valuation level. And so as a result, if you look at the companies that have done that recently, they have continued to grow significantly from when they hit that market cap. And so today, we're looking at Facebook, we're looking at the financials, technicals again, just to see what levels really we want to be aiming for in this stock. My name's Tyrone, it's the 5th of July, and you're watching MiniPip. Before I actually look into Facebook, I actually want to look at the $1 trillion club within itself. So you've got 4 companies that essentially are worth over that $1 trillion valuation. There is a 5th, it's Saudi Aramco, but they got their $1 trillion valuation before they even went public, so I am disregarding them. But looking at the 4 companies you've got, and now 5th, Alphabet, Microsoft, Amazon, and Apple. All of these companies hit $1 trillion valuation. And what I did before the video was work out how long it took these companies to get to a $1.5 trillion valuation. So essentially 50% more, or 50% higher than where it currently stands. And Alphabet did the best. They did it in 397 days. Microsoft did it in 553 days. Amazon did it in 671 days. And Apple did it in just 530 days. Now, averaging that out over the 4 companies, it's taken around 573 days. So 18 months roughly, or just over, maybe 19, 20 months to actually get to that 1.5 trillion valuation, so 50% increase. Now, just looking at the chart, we've got Facebook up, and given where it currently sits, to see that 50% increase, we need to see the share price go from 354 where it currently sits to somewhere in the region of around 531, 532 a share, give or take. There is probably a more specific number, but this does me. Now, on the chart, this really doesn't look like it's going to take much at all. I think that this is going to get there pretty quick. But if we just base it on the fact of the trend that's happening anyways, I would expect this to be worth 1.5 trillion or $530 a share by July 2023, which is around 18 months from now. It's 2 years from now. So it's 2 years. I definitely think that Facebook can go up 50% in 2 years. If revenue's increasing around 20% a year, in 2 or 3 years' time, you're going to see revenue almost 50% higher than where it is at the moment. So seeing the valuation of 512 or 1.5 trillion is very, very possible. I think that this year you're going to be going somewhere up to the region of around 400, and then I think that you'll come back down, hit this trend line again, and then we will go for that 1.5 trillion valuation, or essentially $531 a share, which is a long-term target for Facebook. Now, if they actually keep up the momentum, or let's say they actually get to the average of what it's taken the other 4 companies, Amazon, Apple, Microsoft, and Alphabet, if they can do their average of around 573 days, 578 is fine, you're looking at somewhere in the region of February 2023, so essentially that 18 to 19 month mark. So I even think that it's very possible that it could do it by, sort of 2023 coming into that year. So that means you're essentially going to be holding a stock for 18 months that's going to return you 50%. Now, obviously, there's no guarantee it's the stock market. It can do whatever it wants. But Facebook's one of these stocks that's one of the heavily traded stocks on the markets. And so if it goes down and if it does fall, people buy this. And you've just got so much interest in stocks like these that, seeing them fall like when they did throughout the pandemic or when lockdown started to happen, you see, Facebook went from 207 all the way down to 130, and then it bounced, and it has continued to bounce, and there is no reason for that to not bounce. People are at home, people are on their computers, they're checking Facebook, they're checking Instagram, or whatever it is. So, in this day and age, it makes sense for Facebook to have a bigger ad revenue, because that is where the ads are going to be based. People are online, and Facebook is one of the most used platforms in the world. Now, looking at the income statement, the looking at the annual sort of numbers, we've seen constant increase every single year, and one of the things that I'm very, very impressed about is the revenue is on a constant increase. So 19 to 20 has seen a 21% increase, and then the pandemic year saw 85.6, or almost just short of $86 billion in revenue with a $29 billion profit. So they've got some pretty good profit margins. And if we look at the most recent quarter as well, and this is what's really impressive, is they're on track to do another 20% growth this year. $26.1 billion revenue. They keep that up, you're looking at $104 billion this year. Profit is going to be somewhere in the region of around 38 to 39 billion, and they're just going to get bigger because they just are. And even if we look at the balance sheet and we look at the most recent quarter, you've got cash on hand 64.2 billion. It is massive. Total assets are 163.5 billion. They're up from the previous quarter, 159 billion. And what's really good here is that liabilities have gone up as such from quarter 3. However, on the increase from quarter 4 to quarter 1, you've seen liabilities fall and assets go up. And that is rare. You don't really see that often in companies. Quite often, when you get an increase in assets, you get an increase in liabilities. That is generically what tends to happen. But in the case of here, you've actually seen liabilities go down, and you've seen that the total assets go up, which again, it's a brilliant thing to see. Not many companies have it. Now, just going back to the post, now I originally did do a post on this on the 2nd of July, and I did a quick, run over of the financials anyways. And liabilities to assets ratios comes in at 18.26%, well below stock market average. Competitors, you've got Twitter at 48.3, Google's at 29.6. In terms of the balance sheet health, Facebook is amazing. It is really, really good, and it just makes sense to buy this stock really from the financial aspect, anyways, and even from a technical aspect. So hopping back over to the chart, initially your target is what 531 in the next sort of 2 years. If it's quicker, if the market outperforms, which I think it's going to, we could see that by February 2023. But looking more to this year, I think that potentially, there's a gain of around 14 to 15%. So I am targeting for Facebook, I'm targeting $400 this year, which represents a $50 increase from its current price, or $45 increase from its current price. We have got a trend still going. Let's have a look. So pull that up. I think that we're going to get quite a tough spike throughout summer, and the stock's going to keep rallying. So we're going to get. So if we look at MACD, we've got a positive MACD, which is always good to see. RSI is high. I think that's probably in the region of around 63, 64. So we're not overbought. So we could definitely continue to rally from here. So I think that we'll get to about 375. I think that we'll go into that overbought territory on the daily. We'll see a decline from around 375, potentially maybe back to the trend line, and then we see that increase to 400 quarter 4 of this year. So October, November, December, we see that $400. It's very possible that it could do it in the next couple of months, but I think that 375 will cause this to go overbought. And I think that you'll get a few people selling shares at that level. Then they'll be buying back in sort of around that 325 level, which is going to be where the support is. And then you're going to see a jump from 325 to 400. That is what I would be looking for Facebook. Overall, there is nothing that tells me that this company is going to go down. I think that it is a really good stock, and I just don't see no reason in either trying to short it, trying to, sell it. If you're in this position already, it's best just to hold and just keep a hold of it. If you're in, near the lows, or anywhere, March, April, May, June of last year, or any time last year, you might as well just hold on to the stock, because it's going to continue to rise, and trying to get in at a cheaper price or selling and then waiting for it to fall, it's probably not worth it, because I really do think that this stock is at some point going to hit that 530 in the next 2 years. That would be my initial target. Now, just back to what we do at MiniPip. This is the second video that we've done. We'll be doing a lot more videos. We're going to be looking at Square and AMD next. We'll be looking at Visa and MasterCard as well. So if it's something that you're interested in, please like and subscribe. Thank you.